Good morning, option strat traders. Steve Gans here with another trade concept to consider. This is going to be an earnings trade. Now, again, all trades that I recommend are paper trades. These are designed to help you learn a couple of things. One, learn your way around the option strat platform. Two, learn more about how options move and how different types of strategies work. That's the goal here, is to have you be able to see these in paper without having money at risk so that you understand what's going to happen when you get to that point that you're comfortable with the trade and you move to live trading. So first of all, check this out. I love the new layout here of the platform. So very, very nice. A lot of detailed explanation on things here. So just kind of a cool new look, but the core functionality is all still here. So let me show you what I'm going to consider today. I want to take a look at DAL, which is Delta Airlines. Delta Airlines announces earnings tomorrow morning, 9 a.m. Central Time. So that's just a little bit after the market open tomorrow. That's when they have their conference call. Usually these companies will actually announce what their earnings results are before the market opens. So you'll likely see a move in this pre-market tomorrow when those numbers get announced. And then you'll see a lot of movement while the conference call is taking place. So the numbers that they report are one thing, but what a CEO or a CFO says during the call can dramatically move the market as well. So you need to be aware of that and kind of understand what's at play here. We can also look at prior earnings and we can see that there have been some pretty significant gaps here. So the last earnings report, the night before, it closed at 39.50. The next day, it's down at 36.50. So, that's a 3 to 10% drop. Here we were kind of the opposite. We closed down, and this was pretty flat, this opening was. This one, fairly significant drop from about 31 down to about 28 the next morning, so about a $3 move. So those are things that you kind of look at as you see how has this thing moved previously when they've had an earnings announcement. So knowing that there can be some significant movement here, one of the trades that I teach probably more often than any others for earnings, excuse me, is a calendar trade. What we call a time spread. So it's a calendar, or a diagonal is also an example of a time spread. So let's come in and take a look at potentially building out or optimizing a trade in this case. So I'm going to largely look at this as being a neutral sort of trade. We can see that some of the regular trades come up here, but we don't have a calendar that pops up. Again, time spreads are a little bit tricky. There's something that you need to kind of work your way into. So they won't necessarily show up here. So we're going to go to the build, and here, of course, we can select a lot more different types of trades. Now, I'm going to look at a put calendar. Whether we look at a call calendar or a put calendar is largely irrelevant. The reason they're going to trade the same, they're going to largely work the same. The reason I usually tend to do these in puts is because puts tend to have what are called put skew. That basically means that puts tend to be more active. There tend to be more people buying and selling puts in general than there are buying and selling calls. What that gives us is the potential for a tighter bid-ask spread. So let's just take a look at how this trade might work. Now, right now, I'm going to move this up to, let's go to 34. So I would be looking, take that back. I'm going to actually come down here maybe to 33. Yeah, I think that's probably a little bit better. So a little more, slightly more centered, if you will. So I'm going to take a look at this trade. Now, again, this gets to be a little bit of an unusual trade, a calendar spread or a time spread. What we're doing is we are selling the closest option, which happens to be this Friday. Of course, if they announce earnings tomorrow morning, There's only going to be 1 day left on this option, and that's going to be Friday. So if we're selling that, what we're looking to have happen is we're looking to have a lot of decay happen in that option. We're looking to have a lot of the value fall out of it if the market is in fact at $33 or higher. Now the next one, we're going to buy long, okay? This is what makes it a time spread. It's the exact same strike. So we're going to do a 33 put that we're selling, and then we're going to do a 33 put that we're buying. And we can make the one we're buying pretty much at any point. We could just go the following Friday, or we could go further out on that one if we wanted. We could come out to, May 12th or something along those lines. That makes this trade be a little bit more expensive to get into, but it also then gives us a little more time to potentially manage this trade if we need to manage it. So the way that you can trade a calendar is you either trade it as what I'll call a hit or a miss, okay? And what I mean by that is that if I put this trade on this way, I can enter this trade very inexpensively. I'm only going to pay $23 for it, okay? Now, what happens here, let me shrink my range down just a little bit. So my maximum risk in this trade is going to be what I pay for it, so $23. And, the market would have to be all the way down here at 29 or so for me to experience that maximum risk, or all the way up here at $37. Now, because this is a time spread tent, this is not like a butterfly or a condor where all of your options expire at the same time. And therefore, this tent will shrink and expand with volatility. I know I'm throwing a lot at you here, so if you don't get this, don't worry about it. A time spread trade is a complex trade. So, but it's a good one to trade in paper and model it and understand it. See what happens tomorrow morning after the earnings announcement. Again, trade it in paper and just watch and see how it works. And what you're going to see tomorrow morning at the open is this tent is going to shrink down considerably. Now, if our price happens to open here in the tent, you can achieve a fairly good profit in this literally overnight, 24 hours, because of the decay of this front short strike against the back strike. So let's just look at the volatility and how that comes into play here. So if we look here at our short strike, we can see that the volatility, the IV, the fear, if you will, in that front strike is at 80%. So that's a pretty high volatility reading. And that only stands to reason because as you're going into a binary event like an earnings trade, there's a lot of insecurity or people that are unsure of what's going to happen. So if you are an owner of Delta Airlines long stock, for example, in a retirement account, or let's say you're a hedge fund and you've got $1 billion in Delta Airlines and you don't know what's going to happen tomorrow morning when those earnings get announced, and you want to buy yourself a little insurance, you're going to buy some long puts to protect your investment in Delta Airlines. So that's why this number tends to get elevated just before a binary event, just before an earnings announcement or anything along those lines. The earnings announcement is probably the most common one. Now let's look at the one we're going to buy long. So again, we're going to sell this one, and when volatility is high, that's good for us to sell because people are willing to pay up for that insurance at that point. And when people are willing to pay higher amounts for insurance, that's when we want to be sellers of that insurance. But we don't necessarily want the risk of having shares of Delta Airlines put to us if it tanks, or having a huge loss if it tanks. Let me just show you what happens. Let me just take this one out of the picture a second, then we'll circle back to it. So if I exclude that, you can see that if Delta Airlines tanks down to $29 or so, I mean, we can be down $300, $400, $500 because this is a single short naked option. It is not the way I would recommend any newer trader to trade. That's just a massive amount of risk that you're potentially taking on. At some point, as your trading skills advance and you become more comfortable with how the market moves, etc., or a given underlying stock moves, this can be a very valuable tool for you. But if you are a newer trader, you never want to be in the position of having a naked short put or a naked short call. So now let's come back and take a quicker look, or a more detailed look actually, at this. Let me turn this back on. We're going to include this now. By including this long put, that's giving us protection. If the market does tank, okay, we're going to lose money in this short one, but we're going to gain that money in this long one at the same time. So these two offset each other. So what makes this a calendar trade or a time spread is, again, we're selling this one this Friday, the 14th. We're buying this one on the 21st, next Friday. We already looked at the volatility here. This is 82%. Look at the volatility a week out. It is considerably less. That means that there's less people that are paying a higher amount of money to own this one. Another way of saying it is this one is going to be cheaper for someone to buy than this one is. So if I have one product that's expensive and one product that is less expensive, well, I would want to sell this one and I'd want to buy this one as my protection. So again, that's what makes up a calendar spread in this case. So what I'm going to do is I'm going to propose this particular trade as a paper trade. You can also take a look. You can slide this around a little bit. So I'm not going to go there right now, but this creates what's called a diagonal. This is if we feel stronger that Delta Airlines might rally up. We really don't have any risk to the upside. In exchange for that, we've doubled our risk to the downside. Okay. So, but that's something we could do there. We could move both strikes up to a higher amount, up to 34 or so, if we thought that Delta was maybe going to move up a little bit, but we don't want that full $40 in risk to the downside. So again, there's a lot of different ways that a person can mess with or play with this. I'm just going to go out here near the money in this case at 33.5, okay? And I'm going to go ahead and save this trade now. Again, this trade's only going to cost me $21 to get into. That's going to be my total risk in the trade. This is for a one lot. And then I'll be looking to hopefully make, maybe in the $20 range, $25 range, something like that, if the underlying stock stays in a general range like this tomorrow morning. So when you get filled on this paper trade, or when you save this as a paper trade, I want you to have this open tomorrow morning when the earnings get announced and see what happens on the open. What you're going to see is this tent is going to shrink considerably. There's a lot of reasons for that, way too detailed to go in here in a short video, but just know that the tent will shrink considerably. If you are in this tent when it opens tomorrow, if the price is in this tent, you're going to see a very quick profit come into this trade. And I usually have an order out there waiting to close this in case that happens. I'll go ahead and I'll just float out a good till cancel order. As soon as I get a fill on this trade, I put out a good to cancel order that will take this trade off at 100% profit, for example. Again, may not hit tomorrow morning. The price could be all the way down here. Then I need to cancel that order and do something different. Now, one additional thing you need to understand about calendar trades, you can't let this one expire on Friday without doing something with this one. That gives you additional risk. Even though this one is long, it is going to continue to decay up until next Friday. So if we take this one out of the picture, let's just say this one expires, so I'm going to exclude it. Then you can see, well, shoot, if the market does move up and this one fully expires by next Friday, we'll actually end up losing $100 on this trade. We shouldn't let that happen in a trade like this. Absolute worst case scenario is that if this goes all the way up here, or if it goes all the way down here, we'll close both of these out at the same time and we'll take our $20 loss, okay? So that is the simplistic way to trade these. In my classes and stuff, I get much more detailed. And again, I know this is a lot I just tossed at you. If this doesn't fully make sense, don't worry about it right now. Just trade it in paper, see what it does, see how it works. I'm going to go ahead and save this trade. I'm going to save it as a, well, it's already marked calendar spread. It's going to be in my demo paper trade account. So I'm going to go ahead and lock that down. I'm going to copy the link, share the link with everyone as well. And I would also urge you, again, come in here and take a look. There's great explanations here as to how these calendar spreads work. So take advantage of all the educational content here, but also make sure that you just paper trade these. Paper trade as many trades as you can and learn how they all work. Keep notes somewhere. When I was going through my education, obviously it was many, many years ago. Technology was not quite as great, but you have the ability to, take screenshots on all this stuff. Snap a screenshot now, snap a screenshot tomorrow morning, make some notes on that. I use a product called Loom for video recording my screen. You can get a free personal version of Loom that allows you to make recordings like what I'm doing right here, right now. So you can record all these trades for yourself and record little messages to yourself. So again, it's all about learning, and I'm going to toss this one out again because it's a great one to show you inexpensively. Again, I'm still recommending paper trade inexpensively to see how calendars move. So thank you very much for your time today. And hopefully this will be educational to some of you. If there's some questions you have, you can, of course, post them in the YouTube channel. I do try to answer questions there, but the calendars are a deep concept, so I may not a course that I do on calendars is about 7 hours long. So I'm giving you the very condensed version here, and I will try to answer any questions I can as well. But just understand, I just can't go that deep in an online chat. So thanks again.